Hello and welcome to Ticker Tapes. Today, we're back in the world of ETFs. We are almost at the end of June and therefore halfway through the year, which seems to have gone by in a flash. Investors' thoughts will soon be turning to their summer vacations and beyond that to the midterm elections in November. As they head for the beach, they are likely to have an eye on interest rates and levels of inflation, sentiment around which is driving the markets right now. The S&P 500 has just about managed to cling on to some gains over the last week and is up 1.5%, though it finished in the red in 3 out of the last 5 sessions. It was a similar story for the Nasdaq 100, which managed gains of 0.79%. However, a 3% loss on Wednesday probably says more about sentiment right now than the weekly change. We tend not to pay too much attention to the volume traded data for ETFs because as open-ended funds, there is no limit to the number of shares or units that can be issued in them. As such, the price of an ETF is not usually sensitive to the flow of funds into or out of it. Instead, it is changed in the price of the underlying assets it tracks and holds that determine its valuation. However, from time to time, a jump in the volume traded in an ETF coincides with a change in its price, and we saw that this week in XLE, the S&P 500 energy sector SPDR ETF, which underwent a sharp change of fortune. The price of XLE fell by more than 7.7% in the middle of last week, with volumes traded reaching 56.9 million shares, well above the daily average of 37 million shares. However, by last Friday, the bulls were back in charge. XLE had 3 positive sessions in a row and was almost flat on the week. The swing in sentiment came about as fears about an excess supply of oil in 2023 turned into concerns about shortages in the near term. XLE has returned 35% over the last 6 months. XLU, the S&P 500 Utilities Sector ETF, was also actively traded in the last week and was positive in 4 out of 5 sessions, with volumes traded touching 20 million, some 25% ahead of its daily average volume. Across the week, XLU rose by 5.69%, making it the second biggest gainer among the top 100 ETFs. However, it remains in negative territory over the year to date, down by 3.17%, and that's somewhat surprising given the very defensive nature of the sector. Commodity-related ETFs were the biggest losers. BAL, which tracks the price of cotton, fell by 18.42%, whilst its stablemate JJN, which tracks the price of nickel, slid by 10.47%. The aptly tickered BOAT, which tracks global shipping stocks, dropped 6.57% as container freight rates continue to fall from their recent peaks. There were also losses for a number of ETFs that track the price of foodstuffs such as wheat, corn, coffee, and soybeans, and those moves may indicate that food inflation is now starting to recede.